In the early 20th century, the land that would become Saudi Arabia was among the poorest regions in the world. Life was defined by the harsh requirements of the desert, raising livestock, small-scale trading, and moving between seasonal oases. The economy was small and fragile. It relied almost entirely on desert agriculture and the fees collected from religious pilgrims traveling to Mecca and Medina. When King Abdulaziz established the modern kingdom in 1932, he faced an immediate financial crisis. The Great Depression had caused a collapse in global travel, drying up the income from the pilgrimage and leaving the new nation nearly bankrupt. To fund the government, the king took a calculated risk. He decided to sell exploration rights to a resource that no one was even sure existed beneath his territory. In 1933, the kingdom signed an agreement with the Standard Oil Company of California. The Americans would provide the capital and technology to search for oil, and in exchange, they would share in any potential discovery. The financial stakes were high. For years, massive iron drill bits pierced empty sand, consuming millions of dollars in equipment and labor with no sign of a return. This project was managed by a small subsidiary called the California Arabian Standard Oil Company. It was a minor exploration outfit that would eventually grow into the most valuable energy producer on Earth. The search was grueling. Crews worked in one of the hottest environments on the planet, battling sandstorms and a total lack of infrastructure, while one dry well followed another. By 1937, executives in California were losing patience. With costs mounting and no oil to show for it, they considered abandoning the Saudi project entirely to save the company from further losses. Chief geologist Max Steinecke argued against quitting. He ordered the crew at well number 7 to ignore the standard stopping points and continue drilling much deeper into the rock. On March 3, 1938, the gamble paid off. Oil exploded from the ground at well number 7, producing thousands of barrels a day. Steinecke's decision provided the evidence the kingdom needed. While it would take decades of construction and the conclusion of a world war to build a global energy hub, the discovery at Dammam ended the era of uncertainty and established the foundation for the nation's future. The discovery triggered a massive industrial expansion. For the first time, heavy machinery and steel refineries began to appear in the desert as the kingdom started to build the infrastructure required to export its crude. Exploration soon revealed that Dammam was only the beginning. In 1948, engineers identified the boundaries of the Ghawar Field. This chart shows the scale of the discovery. Ghawar was so massive that its total capacity overshadowed the largest known reserves in Texas and California combined. It remains the largest conventional oil field ever discovered. During World War II, these reserves became a critical asset for the Allied military. Saudi oil began flowing into massive supply lines, fueling the tanks, ships, and aircraft required to sustain the war effort. By the end of the 1940s, Saudi Arabia had become the essential source of the fuel required to power global industrial growth. In the decades following the war, global demand for oil soared. The rise of suburban lifestyles and the proliferation of the automobile created a world that was physically dependent on a steady stream of foreign energy. Throughout this period, the Saudi government negotiated for more control. They slowly bought out their American partners in stages, eventually gaining 100% ownership of Saudi Aramco by 1980. The kingdom's true influence became clear during the 1973 oil crisis. To gain political leverage during an international conflict, Arab producers deliberately restricted their exports. The impact was a global supply shock. Fuel shortages led to massive lines at gas stations and a spike in inflation that stalled economies across the Western world. The crisis demonstrated that oil was a form of geopolitical leverage. By controlling the supply of energy, Saudi Arabia gained the ability to influence global markets and trade at will. Oil revenue funded a total transformation of the landscape. The government invested hundreds of billions into the construction of modern highways, international airports, and massive desalination plants that provide fresh water to the desert. The small villages of the 1930s have been replaced by cities like Riyadh, now a global center for finance and business. Today, the kingdom faces a new challenge as the world begins to move toward renewable energy and electric vehicles. Through a strategy called Vision 2030, the government is attempting to diversify the economy. They are investing heavily in tourism, technology, and renewable energy to ensure the country's prosperity doesn't depend on oil forever. A nation that was built on a desperate gamble in the sand is now attempting to bet its future on a world where oil is no longer the primary source of power.